What is up, guys? It's your boy No Risk No Premium back with another episode of the Sunday Sermon. Well, welcome back to the Sunday Sermon. I'm on my good microphone, so I sound just fucking lovely. You are welcome. Just kidding. Hope you guys are having a great Sunday, though. I hope you got to have a great weekend. Got to enjoy one of my best friends get married. Shout out Tony and Sadie for getting married. Super happy and proud of you guys. Anyway, right back into the meat and potatoes. Sorry, this is getting out a tad bit later. Had some car troubles today. I'll talk about it more in the community, more in depth. But anyway, let's just say this. I finally got home from church now. Okay. But I'm home, ready to rock and roll. Get you guys these levels in our game plan for this week. Okay, to start all off, let's look. Hey, what's going on this week? Economic data. Okay, economic data. What do we have? Okay, I think everyone and their mom is looking right here. The CPI, core CPI index, right? Core CPI index. Obviously, everyone knows November 8th, we have election day, right? November 8th, we have election day. I'd be interested to see the consumer credit level change. We've got a dick ton of Fed presidents speaking, which are all full of fucking idiots anyway, it seems like. But you just have to know when they're speaking. You see Barkin here, Williams speaking. I think Waller speaks. Who speaks Friday? Veterans Day. Veterans Day holiday on Friday. Good to know that, right? Good to know that. All right. But you can still see Lori Logan speaks. We obviously have the University of Michigan Consumer Sentiment Index, 5-year inflation index. Esther George speaks here. Williams speaks again. Mester speaks again. So just know that, guys, right? You're going to want to know that. Okay, but Monday, see consumer credit. Oh, shoot, excuse me. Election day, primaries. Okay. Wednesday, obviously, we already went over that. But Thursday is going to be the day. Thursday is going to be the day, all about CPI. Why is CPI so important? We're always barking about CPI. Well, what did the Fed chairman say? Powell, the last FOMC. He basically said we are in no point or position to stop tightening, to stop raising rates, to stop rolling off the balance sheet because inflation's out of control, PCE's out of control. They have to be data dependent. They know that these are delayed data points, but they're nowhere near levels that they know they need to be. So it's important anytime a CPI or a jobs number or a jobless number comes out, it's important for us to pay attention to those. All right. And I'll get into the Friday's action as well when we get to the charts as to why it's important not to trade the news, but to trade the chart. Okay, we'll get to that. Earnings whisper. What do we got coming out this week? Palantir tomorrow. Walt Disney, interesting one, will be the 8th. Interesting because obviously Disney makes movies, they have their streaming software, etc., but their parks make them a dick ton of money. Okay, so if people stop spending, which is anticipated to happen when we raise rates, maybe they stop buying overly expensive Disneyland tickets, Disney World tickets. They're also in like 6 other countries, whatever it might be, but all their parks around the world. Okay, Norwegian's an interesting one as well. Why? It's more consumer focused, right? It's more consumer focused. Are people going on cruises? Are they spending on hospitality? Are they spending on travel? That's all extracurricular, disposable income. That is not necessity. Like you do not need that to live, right? That's not your rent. It's not your food. It's not taking care of your children. Okay. Roblox, I think that's the gaming one. I'm not really sure. On the 9th, I think that's going to be what, Wednesday? The Trade Dex TTD hasn't really done much since its fucking insane split, but this stock did go crazy during COVID. Be interesting to see what they do. Don't really know too much about them. I know they're in the advertising space or some shit like that, whatever. AMC, all those apes finally realizing that the run might be over. I don't know. Don't go on Twitter and don't type in AMC and say anything bad. They'll fucking annihilate you. Hopefully Elon maybe just cancels all them off Twitter. Just kidding. But maybe not. Anyway, Upstart the next. That's they do all the debt funding, I'm pretty sure. I think if I'm not mistaken, they're the one. They're more debt and loan, I believe. Okay. So yeah, Those are the main ones this week. Nothing coming out this week that would drastically move the market. Like I said, all those big tech earnings are out the way. And if you notice, if you watch the VIX this week, it just got annihilated. Why did it get annihilated? Well, all of the huge tech earnings, FOMC, all that shit just made the VIX rise. Okay, it made the VIX rise up. All the contracts across the board were in crazy expensive. So even when the market dropped, so did the VIX. That's called volatility crush. Okay, volatility crush. Okay, so we'll look to see what's on the Fed board. They don't have anything updated on their website as far as what's coming out through them, but we saw here they got a bunch of these idiots speaking. So just pay attention. Okay, just pay attention. All right. Onto the charts. I want to go over Friday's action real quick. Okay, Friday's action real quick. Here, what do we see? Right? Non-farm payrolls came out in the morning. Oh my God, they came in hot. That means the Fed needs to keep on tightening. Then why didn't the market go down? Right? That's what probably everyone was thinking. Why didn't it go down? Matter of fact, it went up. It went up on the data. Here was the data. It's 5:30 my time. I'm 3 hours in front because I'm on the West Coast. Shout out all my West Coast traders. You're the real badass. Anyone on the East Coast, you're a lazy piece of shit. You get to wake up at 8 p.m. or 8 a.m. every day. I'm just kidding. I'm just jealous. Okay. I'm just jealous. Let me be jealous. You guys are still kick ass and badass, all of you. Okay. But look, went up. Where did it hit? 388. Go fucking figure. We said 388 to 380, big level. Okay. They dropped it in the morning. Held what level? 372. We had 372 as a level. Then went rockety back up. Then dropped down 370. Held it. Okay. Proceeded to base and then rocket ship into close. The close was definitely more of a, to me, just a short squeezing into close because you could not get through 370. Okay. And there's probably a lot of put gamma down here as well at this 370 mark. So the dealer had to cover, meaning the market maker needed to make sure he was going to be okay. So anyway, closed up here at 376. I'm pretty sure futures market opened here 15 minutes ago. They were, I think it opened down like 25 handles, 30 handles quick. It's currently, no, it's down 25 handles right now. It was down 15 more. So it was down 40 right off the open, but rebounded back up, likely bounce around and maybe go test 3,800 again overnight. That'd be a good spot. 3,805, take a short there. Basically the high we got to Friday. Okay. On Friday. Now let's zoom out. Okay. Well, let me see. Look, it's important to, as a trader, to be a reactor, not a predictor. Because if you were a predictor, you probably went short down here. Right? Why? Because the numbers came in super fucking hot. That's not good. That means the Fed needs to keep on tightening. The job market isn't responding how it should. When the Fed tightens rates, companies tighten up their headcount. They start laying off people. They don't hire new people. Okay. It's too expensive. Okay. It's too expensive. So, but there was something interesting on Friday that came in that was the unemployment was actually 2 ticks higher than they thought the expectation was. So I think initially they saw the hot jobs number over, however many thousands over new jobs created, and how they're doing that, I'm not sure, because I can't still seem to get a cocktail at a local bar near me without a 30-minute fucking wait. So I don't know. I don't know where these numbers are coming from, but the unemployment rate was up. So did they see that as maybe a silver lining positive that the Fed is actually doing something right and the market is reacting accordingly? I don't know. Okay, but time to zoom out. Right, time to zoom out here. Charts are ugly. Let's take a look. Get a little closer. I mean, you could call this a doji reversal here, but one thing I did notice is what we never truly lost the 20-day moving average. Right, we never truly lost it. Okay. We got lower, but look, we bounced back up and covered, and we still close above the what? This red line, solid 21 EMA, right? 21 EMA. So closed above it. Good. Okay. Closed above it. Good. Closed above the 20 MA. Also good. 372. Go figure where we bounced, right? We bounced off that level initially as well. Closed above it here. Where did we reject? Well, almost a 5 MA. If you remember Thursday night on my shitty microphone, while I was traveling, I said, look for this 5 to 50 cross, right? Purple dotted is what? Purple dotted line is 379, right? Blue dotted 378. What was the high? Friday. Go figure. We went up and kissed it, right? Go figure. Okay, so what's my plan for this week? Well, I want to just take a peek here, right, and just zoom out even more. Then take a look left. Okay, zoom out, look left. Well, one thing is the 200 MA or the 50 M, excuse me, 250 MA on the monthly is held very significantly. Okay, very significantly. Also happened to be a 50% retrace off the COVID low to high. Okay, one thing I did notice as well, I put up on Friday is this, right? Is this. What happened here? What was a retrace of this entire month? We came right to this 50% retrace of this entire month. And that was the area they needed to put in the bounce. They got the bounce. Bulls safe for now. Above 370, they're safe. Okay, but with all these idiots talking this week, I mean, all the Fed presidents, okay, and then what else comes out this week? CPI. Do you think the whole fucking world's going to be watching? You bet your ass they will be. Okay, so now let's go to the weekly. Weekly chart doesn't look bad either. Close above, right, that the 2 weeks ago weekly high. So that's good, right? Still above 375. Good. Good. Now, as far as what happens now, well, there's no candle that looks great, right? But above 370, the rally's still on. Okay, above 370, the rally's still on. So what do I expect for this coming week? Okay, this coming week here, I definitely just expect this 380 level to be heavily defended. Heavily defended. Okay, I would probably expect there to be an overnight touch of it or a cash open or during the cash trading tomorrow. Okay, for me, being where the 50 MA will be at again. Okay, at 379, 380. Okay, let's see where the 5 MA opens up will be interesting, right? I would definitely say 380 is definitely an area for tomorrow. I want to look to take a trade short there. Okay, and if we come back and hold, okay, we come back and hold 370 to 372 on any tester, I'd probably take a stab long. Okay, probably take a stab long there. But we know this. The market trends and the market consolidates. The market trended here, right? Trended from where? 364 touch trended all the way to 380. Then it consolidated, right? Or to 385. Then it consolidated in this 380, 390 range. Broke down out of that range, had 3 trend days down for the most part. And now we're starting a new trend where? Or a new consolidation where? Consolidate between where? 370 and 378. Okay. So that's why I said anywhere from 378 to 380 and 372 to 370. Those are areas of where people are buying and selling. So you're going to look to possibly take trades off those levels. Okay. Now, if we get above 380, it means we're back above the 50 MA. It's extremely bullish. Extremely bullish. Okay. Especially if you can get this 20 MA to curve up, maybe cross over the 50 to the upside. I'm not saying it happens, but you just have to think, what if that happens? Then you know how to react. We're reactors. We're professional reactors. Okay. If you're a predictor, then the market shouldn't even open. There's so much fucking bad news out there. Okay. Shouldn't even open. Okay, so look, I'll be looking 378 to 380 for a short. Okay, I'll be looking 370, 372. Now, and though those are 2-point ranges, but look, they're giving you a 10-point range in between. So look for the setup. Look for your reversal candles. Look for bullish engulfing candles, doji reversals, hammers, bullish hammers, bearish hammers, right? Those are all your intraday, right? Intraday reversal signals for you to maybe take the trade to confirm you taking a trade. Okay. 3705 ES, I would look to long likely, and 3805 look to short initially. Okay. Initially. Now, those are just trades for tomorrow. Every day is a new trade plan, right? But macro zooming out now, what happens if we get above 380? We go 385, 390, 396, 400, 403, 200 MA up here, 408. Gap fill is 408. Go fucking figure. Above the 50 MA, I believe my price target will still be the 200 MA. Now, if we get below this 20 MA, which is 372, what did Chris say? 370, 372. That's what a buy area. Well, if we get below it, Okay, we get below it, then we'll be out of this 370 to 380 range. Okay, we're in a range right now. Are we going to trade in a range all the way until CPI? It's very possible. So every time you need to know the levels, you're going to short and long. Okay, but underneath, let's say we break out down. Underneath, and I'm going to take this fib off here because it gets a little harder to see. Underneath 370, 364, 360, 357, 348. Okay, 348. All right. So, guys, look, that's it. I'm going to wrap it up right there. Know what's going on this week. Major economic data. Okay, Thursday, CPI. Friday, Veterans Day. Know that. Know when those idiot Fed speakers are talking. Okay, almost every day this week they're talking, right? So know that we're in this range, 370 to 380. So if we're in a range or a range trading, that means you buy puts off the top and calls off the bottom until we break out of that range. And usually we break out of ranges when there's significant economic data. Well, that's Thursday. So we'll be looking for that as well. Okay, guys, last time. Want to see where the 5 MA opens, 50 MA opens, 20 MA opens. Those are the closest, right? We're getting closer together on them. Okay, so it's a possibility. There's going to be a move happening here to the upside or downside. What side it is, I don't know. We don't know yet. Okay, we don't know yet. But all I know is this, I'll likely be taking a stab short at 380 and taking a stab long 370 if we get there. Okay, above 376, go 378, 380. Above 380, that means above the 50 MA, 385, 390, 396, 400 psych level. Okay, I'm sorry, yeah, 400 psych level. 403 started the gap fill up to 408, which is the 200 moving average on the daily, right? Underneath 370, 364. Okay, 364, 360, 357, under 357, pretty much a free fall. Likely new lows come there. 348, under 348, 342, 339. Okie dokie, guys. That's all I got for you, man. Hope you guys have a blessed weekend. Get your homework done, get your levels right, wake up early, have a trade plan, and of course, never do anything fucking stupid. See you guys bright and early. Peace.